Hello, my name is Michael Swanson. I run the website wallstreetwindow.com, and I want to talk with you today about the types of trades that are now working in this crazy stock market. Now, the stock market peaked out last July, and it took a big tumble in the first 2 weeks of this year. Trades that were working a year ago no longer are working, and the fad stocks of 2014, such as Chipotle, LinkedIn, and even Apple, are now causing people to lose money. Most stocks have been hit hard this year. Now, people are very confused about what is happening in the financial markets. When the market fell at the beginning of this year, if you turned on CNBC, you probably saw lots of experts say the stock market was falling because of China. But this isn't really the cause of what was going on. In reality, the stock market went up so much in the years before this one due to Fed money printing operations, and those printing programs are gone and have basically run their course. Watch this. This is a clip by former Dallas Fed President Richard Fisher explaining this.
This has to do with the Fed?
Well, look, I think part of this obviously has to do with concerns about growth and whether China's a leading indicator or not. But I think we have to bear in mind that what the Fed did, and I was part of that group, is we front-loaded a tremendous market rally starting in 2009, in March of 2009. It's sort of what I call the reverse Wimpy factor. Give me 2 hamburgers today for 1 tomorrow. And I'm not surprised that almost every single index you can look at, if you take away dividends in the S&P last year, unweighted was down significantly, and all the other indices were down. In terms of the 10-year bond, there was almost no movement for the year. Basically, we had a tremendous rally, and I think there's a great digestive period that's likely to take place now, and it may continue. Again, analysts are always looking for a tripwire. The fact is, we've had a great market movement since 2009. It's going to take a while to digest this. I wasn't surprised at last year, and I wouldn't be surprised at a rather fallow performance this year as well.
Well, I guess then the question, Richard, is how ugly is it going to get? There was a point yesterday where the Dow was down 467, and everyone was trying to figure out, to your point, why? Does the Chinese stock market really affect us? If you do see this as this big unwind from Fed policy, which fueled a 6.5-year bull market? What does it look like on the way down?
Well, I was warning my colleagues, don't go wobbly if we have a 10 to 20% correction at some point. The market's still overpriced. Everybody you talk to all morning long, from Byron on, have been warning that these markets are heavily priced. We're trading at 19.5 times earnings. We're not having the kind of top-line growth we would like to have. We're late in the cycle. Things are richly priced. They're not cheap. They may not be overpriced any longer, but they're certainly not cheap. So all the managers that I talk to in my role at Barclays, and that's quite a few across the world, a lot of people are building cash positions. The rates traders are different, but I'm talking about the long-only investors, or those that are taking a longer-term view, are being extremely cautious here, are raising their cash levels, are nervous about the valuations that are in the market, and they realize the old dictum from Ben Graham and Warren Buffett: price is what you pay, value is what you get, and the values are very richly priced here. So I could see significant downside. I could also see just a flat market for quite some time, again digesting that enormous return the Fed engineered for almost 6 years.
So how do you make money in this? Well, the stock market is headed for more turmoil this year. It's only just begun, and that means that more stocks are going to continue to decline and they go up. And the stocks that are going to decline the most are the worst stocks in the market. That means the best way to make money is to bet against the worst stocks. Well, I've been doing just that. I started to do that in 2015, and I'm doing that even more aggressively this year. And every weekend, I run scans and do research to find bad stocks to make new trades with. And I've even put together an entire course which includes the scans that I use to do this, and you can use them yourself also. So if you want more information from me to do this in the financial markets, just click the link below this video and let's get started.